Hi everybody. Well, two big events to consider really for next week in markets. That's that the US might be about to impose tariffs on Mexico, and that we have the beginning of the UK Conservative Party leadership race. And so the winner of that race will become the next UK Prime Minister, and all the implications that has for Brexit. The backdrop to this is that we've had some pretty choppy equity markets. We dived at the beginning of the week, particularly tech stocks, but we've rebounded last week, that is, on the talk of lower interest rates. We entered an oil bear market. And one of the big differences last week is that we've started to see a falling US dollar. And as a result, we've seen rising gold prices. So I think probably the questions for this week will be, what wins out? Is it the Federal Reserve or the J. Powell put? Or is it the trade war? The trade war being a negative for equities, the Powell put, i.e. the Federal Reserve willing to step in with lower interest rates to support the economy, being a positive. One of those has to win out. And then, of course, who comes out on top for the next UK Prime Minister? And we'll talk about both those in a little bit more depth just in a minute. Right, so up next for the economic calendar, China trade balance, just important because of the trade war that's taking place, obviously, watching both those export and import numbers. Export in terms of global demand, import in terms of that domestic demand. UK unemployment, always worth considering this in the context of Brexit. I would argue that the sentiment is quite bad for the outcome at Brexit at the moment, and so the UK data just has to be extra good to outweigh that. US CPI, obviously inflation, always a big monthly data point. This time around, we're just asking the question: was Powell right to turn more dovish? As a reminder, he said the Fed would do what it can to sustain the expansion. Whatever's necessary, I believe his words were, to sustain the expansion. So a bit of a dovish tilt. If the CPI is soft, that tilt will be justified. If not, it won't be. And we'll see repercussions in the dollar. China retail sales, again, the trade war, and US retail sales, again, considering how that reflects vis-a-vis the Fed. So without too much in the way of earnings to consider this week, I'll just jump straight into these two topics. The sanctions on Mexico. One of the more notable effects of this has been the bear market in the oil price. It wasn't just this Mexico news that triggered the downturn in oil. We have had significantly higher inventories in the US as well. And I also suggested in previous videos that supply was going to become less of a consideration. Demand was going to become more of a consideration for the oil price. And the way the market's interpreting Mexico plus the China-US standoff is that they are all bad things for global growth, and weaker global growth spells less demand for oil. Now, whether these tariffs actually take place or not, we don't know. At the time of filming this, towards the end of the previous week, maybe the US still lifts these things. I think the consideration is that the Senate could block the declaration of national emergency, but that would be very bad politics because the Senate is Republican-led, and obviously Trump is a Republican, wouldn't do too well leading into the elections. Trump may listen to concerns of higher US petrol prices on imports from refined products from Mexico. But it seemed most likely a 5% tariff on Mexican imports is going to start as of Monday. And then it just depends on the rhetoric moving forwards as to what the further effects on markets will be. The experience from the US-China trade war has been that as long as Mexico is still talking, as long as there's still negotiations taking place, the markets will assume the tariffs can stop. That was a wrong assumption, apparently, so far in the US-China standoff. So maybe a little less tolerance for it this time around. And in general, we feel like there still is room for another little down leg in equities. The oil a bit more oversold, probably due a bounce. And of course, we've got the kickoff of this Tory leadership race. In terms of markets, the British pound found a base around 126. Any strength that we've seen in the pound, probably more about dollar weakness than pound strength. Who end up as the major candidates here? will determine whether we see some pound strength coming in. It's hard to see investors getting too enthusiastic about buying the pound when there's such political uncertainty. I would say by the end of the week, there should be slightly less political uncertainty because we'll probably have the two major candidates to consider. At the moment, Boris Johnson, a front runner, you'd imagine he'd be one of those final two. We talked about last week in a video how he was expected to appear in court, just sort of cements his case as a well-known public figure, someone the public might choose to elect against Jeremy Corbyn in an election. And I think probably that general election is the key issue here, less so than the specific economics around Brexit. It's how do these candidates position themselves towards Brexit, and how much does that increase or decrease the chance of a general election? Because were a general election to come about, it very much raises the chance of Jeremy Corbyn's Labour taking the helm, generally viewed as pretty unfriendly towards business. And so that would be very much a negative for markets if that likelihood increased over the next week or so. Right, thank you very much for watching the video. That's it for this week. If you want to follow these videos as soon as they're released, please follow myself and LCG on YouTube and social media.